Hi everyone, just want to share my thoughts on gold on GLD real quick. This is the exchange traded ETF, not gold itself. Gold itself is over here, XAU. This is end of the year. This is December 31st, 2014, and let's take a look at it on a weekly basis. Um, this chart goes back to June of last year, even a bit before that. And you can see that gold's in a pretty sustained downtrend. Um, I believe this is a wonderful long that the authorities messing around with printing money and 0% interest rates is going to be a long-term tailwind to gold. And if you don't believe me, ask the billionaires. They'll tell you the same thing. There's a reason why they're billionaires and we're not. They can call a spade, and they have a 10-year investment horizon, not a 6-month investment horizon like most retail investors. If your investment horizon is 10 years, buy all the gold you want, but you're going to get better prices. Technically, this chart looks pretty bearish to me. You can see that after the initial sell-off back here in 2013, we came down and made a low of 114 and change. I don't know. I think that's around 1200. I don't know what that is on the actual price, but I'm just going to use 114 for GLD right now. I believe it's around 1200. And we put in a hammer, not a very good one, and came back up and tested resistance above. And of course, we ran into overhead resistance and fell down again. Again, we found support in the 114 region. This time 115 actually made a higher low and came up and tried to get a rally going. That also failed. Went sideways, and when you're going sideways and the trend is down, you're going to go down some more, and that's exactly what happened. Failed, another little mini rally here, failed, started to cascade down. Found support again at 114. This is a key level. Came up again, ran into resistance, fell some more. It's making lower highs and lower lows. This is the textbook example of a downtrend. Now, there's lots of people out there who are saying that what I just said, long-term gold is a buy. There's plenty of gaps above in this chart, the current price level that I believe will eventually be filled. I don't know when. No one knows when. But for right now, don't worry about them. I don't think we're in a place where gold is just going to turn around and blast off. I believe that the current trend, the trend is your friend, and the current trend is pretty clear here. The current trend is rallies have a lifespan. They do exist, but they're all being faded. They're all failing, um, and the price continues to trend down. Now, January and February are historically bullish months for gold. I have no idea why. It's generally not, I'm guessing from Christmas sales, it's generally not a great idea to take a position against seasonality. That said, the trend overrides seasonality in my opinion. So don't go out and buy gold because you think January is going to boost the price. Gold has no idea what month it's in and it doesn't care. Um, Price dictates, and in this case, we have some bearish tailwinds on gold. Gold's a wonderful inflation hedge, but it doesn't pay a dividend. You don't get paid to own it. You get paid to own everything else. Utilities, um, tech stocks, the S&P 500. Um, you don't get paid to own gold. This is simply when you're worried about future inflation and you want to hedge that inflation, or you're worried about a currency collapse, which those are all pretty rare things. Um, the Fed threatening to raise interest rates, and they may even raise interest rates if they have the stones to do that, um, is another very bearish um, tailwind to the price of gold. Um, Remember, the market looks out about 3 months typically, uh, and supposedly interest rate rises will start to become a genuine possibility around March. If that's the case, you're going to see some continued weakness in gold in January and February, uh, seasonal factors being barred. This latest price action. This is a weekly chart, not a daily chart. This latest price action, you can see that support, which used to be 114, right around 114, was broken right here pretty significantly. And a new bounce level, support level, was made at 109. Once 109 fails, I expect we'll see 103, 106 to 103 in a hurry, and even below 100, which could make some out of the money puts in April, May, or June very attractive. We've had a reversal here, multi-week reversal that came up. We get a big gap on a weekly down here at 112. Came up and tested the 119 level. That failed. And again, we're failing to hold 114. 114 is a very critical level, as you can see. Three bounces on a weekly level off 114. And we're not holding it. Right now, the market is below 114. It's below the 50-day moving average. The 50-day moving average is falling, generally speaking. Let's go look at that real quick. It got rejected after recapturing the 50-day in a big way the other day. Yesterday, it was rejected by the 50-day today. This is not necessarily a chart that's that's about to eminently break down. We're building a little wedge here, and we're getting these nasty little price spikes up to resistance. But there's a lot of overhead resistance in gold. Overhead resistance doesn't matter just so long as it's being broken consistently and turning around and acting as support. But that's just not happening here. I'm reading in the news about a lot of people who are bullish on gold. A lot of retail investors think that the short gold play is overdone, and it's time to burn the gold bears, and it's going to ramp up, and we're coming into a seasonally bullish time, and this is a wonderful time to run out and buy gold, and the chart is just not supporting that thesis yet. I like that thesis. I hope to make money with those people someday, but that's not what the chart is telling you. The chart right here is telling you, especially at a weekly, try to look at weekly, don't look at dailies. The daily price action has been wild. The weekly shows the overall trend, the trend is your friend, is down. Continues to be down. I'm looking for 114 to serve as continued resistance with minor breaks above it that will all fail. And eventually looking for 109 and below 100 will probably mark the washout bottom in gold. If we look at a monthly chart, you can even look at a quarterly or a yearly. Gold came up here and made a high at 1800 and change. A 50% retracement, as happened in the 80s, would bring us down to the 90s. This is 184. Half of that is roughly 92. 97. That puts us right about here. And we're still a ways above that. And if you like, this looks like a little monthly bear flag to me. We bounced again off 109 and came up, and on a monthly close, which is even more important than the weeklies, it sold down. We got up as high as 119 and they sold it down. So while the daily looks encouraging, it looks like a trap. You back out and look at the weekly, look at the monthly, and people do not want to own this above 114. The true value of gold is difficult to determine. Long term, its value may be as high as 3,000, 5,000, 10,000 an ounce, but long term can take years to play out. And in the meanwhile, gold ran up to $1,800 an ounce with no reason to own it besides inflation. When that inflation vanishes, the value of gold greatly diminishes. And right now we are not in an inflationary environment. There's been easing by central banks around the world. China just eased $800 billion worth. That sounds like a lot of money, but it's not really holding up their markets. It didn't cause a big spike in price. that's really a drop in the bucket compared to the size of the Chinese economy. The Chinese economy is now bigger than the American economy. So 800 billion isn't what it used to be. Um, on top of that, Europe, you have Draghi retiring, it sounds like, and thinking about running as Prime Minister of Italy because any of his easing schemes are rejected by the Germans, who are becoming ever more austere. Um, Greece looks like they will default. They'll drag it out, but they have little choice. Any economist worth his salt on TV is saying the same thing. It's not a matter of when they'll default. It's not a matter of if they'll default. It's a matter of when. And the reason why they're saying that is because Greece is like bailing out the ocean. They're running such a massive deficit over what they're bringing in revenue that every time you give them more money, it simply vanishes. They simply deficit spend it, and then they need more. And that will just go on. That'll go on until the creditors run out of patience and simply kick them out of the EU or they leave on their own. Everybody wants that to happen. They're trying to let that happen without rocking the entire financial world. Whether they can do that or not, I honestly don't know. I hope they do find a way to do that without crashing the world, but history says that's not possible. That is an event that sounds like it would be bullish for gold. I don't think it is. That's deflationary. That's debt destruction. Debt destruction is deflationary. If you remember back when the world was blowing up back in 2007, let's see if we can get back that far. I don't know if my chart will go back that far. Yep, there it is. The panic set in and gold soared, and then it actually pulled back drastically, right? It actually went, I remember up here, just after 2008, just after the market started to really panic in 2007, gold blasted off, and it hit a high of 1,000. And then deflation set in. The Fed hadn't really started ramping up their printing yet, and we got a massive pullback into the 700s. That's a 30% decline. That's a big pullback. And of course, the Fed stepped in, pumped liquidity, and that put a bid under gold. But this was not, before the Fed stepped in, this was gold reversing in a big way. The support levels here, 82, 83, right around the 800 mark, was completely breached. Gold held the last high of this candle on a quarterly basis in the high 700s, but this was really kind of a parabolic move. This is a big move up, and it would have failed completely had the Fed not stepped in with liquidity. The Fed is continuing to print right now. 800 billion in treasuries are rolling off. The treasuries they own, the interest on the treasuries they own, prepayments and the interest, they're rolling into new purchases. Look it up. That's what they're doing. So there is liquidity out there, but they're talking about raising rates, and Europe, it doesn't look like they're going to print anytime soon. Those two things alone, unless Asia quadruples their printing in a big way, that's why this chart looks as bearish as it does. Against the Ichimoku cloud, if you believe in that indicator, this does not look good. Price action is below the lagging span. The lagging indicator is below the cloud and previous price action. The future cloud is showing gray over yellow, or if you like, red over green. And this cloud is getting thicker. We're below the conversion line. We're below the baseline. We're below the cloud, the prices. This is going to make a new low. On a daily, there's a gap. This has been some wild price action. There's a big gap down here at 109. These are not legitimate hammers. These are not big green hammers on volume with a tail underneath and a hammer above. These are kind of reversal morning stars, it looks like. Or gravestone dojis, if you will, only in the reverse, only to signal a turnaround reversal to the upside. But those are not the kind of genuine hammer that are tested and hold and show a long-term bottom. There hasn't been a lot of basing here. This was a whipsaw, big price action, big volatility, moved to the upside. Gold was very oversold here, very gappy, very panicky. Sentiment was wildly bearish, and it was time for a big counter rally. This is a counter trend rally. The trend is down, and now it's wearing off. Deflation is setting in some more, and we have gaps to fill on the downside. We get a gap at 112, another gap, a gap here at 112 and change, another gap at here at 112. There's actually a gap down here at 110, and another big one at 109. Given all the deflationary tailwinds, the market's looking out 3 months. Please buy gold after it breaks $1,000 an ounce. If you see GLD under 100, buy all you want. I highly doubt gold is going to plunge to $600 an ounce. That would mean inflation is completely dead, deflation is roaring back, and we're re-entering a deflationary depression. The people in power will not let that happen. They will go to absolute extremes. The Federal Reserve Board possesses enormous powers that people can seldom understand. They possess the power to force private banks to lend. They can punish banks for not lending. They can buy up corporate bonds, municipal debt, high yield debt, stocks, as well as preferred stock. They can buy bonds. They can buy any kind of debt, any kind of state-issued debt, and they will. I know they will because every single time throughout history, every single time through history, not once in history has a central bank begun printing on a massive scale like ours has and failed to sponge up every single debt instrument there is. Once they start the supporting of the debt markets, they cannot stop. They cannot stop. If they stop, we go back to 2007 and a massive deflationary depression. No one wants that to happen. They'd rather deal with uncomfortable inflation for 20 years. They are terrified of a 6 to 12 month deflationary collapse. Never mind the fact that the very wealthy in New York and elsewhere who very much run this country would be wiped out. So do not buy gold here. Protect yourself. This is some wild action. This is there's lots of big dips here where buyers are stepping in. Look at this one. This is a mammoth short squeeze. People who were short, gold was breaking down and made new lows. It broke the lows of 3 days and then turned around and reversed big time. So you want to use a really wide stop here, or just buy puts outright and go out 6 months, 3 months or 6 months. Right now gold is threatening to break down again, as you can see on the chart, and I believe it could even fill this gap and it's going to turn around again. It's going to be all over the place because no one knows if inflation is dead. And the Fed is threatening to raise rates, but they haven't done it yet. And until they do, it doesn't really matter. So gold investors and gold traders are very, very confused. One day, there's inflation to worry about. The next day, there's deflation to worry about. That's why this chart looks like this. But there's no durable bottom in place. So why would you buy? If you want to buy, take a trade to the upside and use a tight stop underneath. Whoever made this trade obviously had a stop at this gap, at this low. It didn't get hit. Gold blasted off. They did really well. Great job. Well done. But there's still a big gap right here that we have not filled. Typically, in a trend, the trend will go down or up, whichever, and then for a time it'll go sideways. And that's essentially what happened here. Gold made this bottom right here at 114. We came down and broke it, but we've been going sideways since we regained it. And now we're starting to lose it again. But a market will often go sideways in price and then continue with the previous trend. We are continuing with the previous trend, which is down. So don't get burned buying gold to the upside. Whoever is telling you to buy gold, they're panicky and they think they're Warren Buffett and they're buying the bottom, and they're gonna they're gonna beat everybody to the punch. Okay, patience pays. Be patient. You're going to wake up one morning and there's going to be a woman on TV that says gold is dead. There's no reason to ever own it ever again. It was always a scam. It was always a dumb trade, a dumb buy. It was a retail buy, and all those people are going to go broke. That's when you can buy gold. Okay? Then when it's this time is different and gold is going to die and people are calling for $500 an ounce on gold, buy all you want. But we're not there yet. Um, Early in the year is more bearish for gold. It usually has a really rough August and September. It usually has a really rough spring. But quite frankly, throw that out. Follow the trend, follow the price. We're making lower highs until we take out 114 and hold it, and then 118 and hold it. I would not consider the downtrend over. Thanks.